Okay, good morning, folks. Apparently, I am live. I have to get used to knowing which screen I'm facing. I'll get all that worked out eventually. Thank you all for your patience. And Doc McGraw, a lot of you know me, and just going to get on with the daily plan. This is not going to be, if you've been watching me, you know it's not a slick presentation. It's one trader talking to another, sharing what I see using my resources. Um, I was thinking yesterday, I call my approach, and I'm going to brand it, quote unquote, quantitative. I use a lot of quantity stuff, gamma levels, um, VIX, where things quantitatively flip. But one, I'm not to the penny or to the dollar. And I've been at this a long time. I'm 72. I'm old. And so there's a certain intuition or experience or feel that I get and that some traders get that I use in conjunction with the quant stuff. The quant stuff is going to rule. You know, the numbers are the numbers. I can't lie. I can't pretend what's here or isn't there. But sometimes there's just a feel for how markets operate, or forget even markets. When I look at the option chain and I see the bid-ask spread widening or narrowing or something, I just get that feel. I can't convey it to you sometimes. I just kind of know from thousands and thousands of repetitions. Anyway, enough pumping all that crap. Let's get on with what's going on. And for that, I'm going to kind of use as the outline my daily plan that I post numerous places, some of it abbreviated and some of it, the longer version. And I'm just going to pull it up here on my phone so I can sort of make sure that I'm reading, that I have at least that structure, and trying to make it a little more structured, a little more organized for folks. Okay, so here we go. And all right, next time I'll be more prepared. I'll have all this stuff out in front of me, I promise. Here we go. Okay. So let's just go back to yesterday for a second. Now I'm going to turn away and face the computer. So real quick. So yes, let's start from a quick recap of yesterday, but that's sort of ancient history, so we'll kind of move on. So if you remember, Friday we had the gap down. The Friday low was 56.63-ish. Where was it? Whatever the Friday low was. Where are we? Here we go. Here we had the Friday low. That was the overnight low, was 59.50. Remember, the world was falling apart Friday. The intraday low was down around here, 65-ish. So 50 has been pretty good so far, 59.50. If you're a premium seller like me, it's important to know those levels. And if you're trading and you have extreme targets, it's important to know those levels. If you're a scalper, we ended up closing at 75 on Friday, and then over the weekend we had that we had the Mideast fears abated somewhat, we'll call it. VIX came back in, and we gapped up on the Monday open around 6,000 over here. Let me make it so you can see my chart better. We gapped up around 6,000, Monday open around here, and we never gave it up. We never really gave up 6,000. And we had the IC whale, who those of you who've been following me or follow the space know there's a small hedge fund guy, he's on Twitter, it's not a secret, who sells iron condors, and he uses what's called a martingale simulation. If he loses, he doubles down the next time until he wins or goes broke. So far, he hasn't gone broke. And so he lost yesterday. He had his call credit spread at 60, 20, 25. He lost, he doubled down. He now has 10,000 contracts up at 60, right up here, 60, 60, 65. So we could pretty reliably say that that's going to be a top, or I'm going to say that. And the interesting thing is his put credit spreads are down here at 90, 95. So that's clearly going to be our make or break level, so to speak, with 6,000, the large round number also obviously being very important. And so that kind of helps to find the chop zone for today. So Mideast fears reared their ugly heads again overnight with Trump talking about, telling people to evacuate Tehran and flying back to be like in Washington for updates and various tweets and missives that are somewhat opaque. And so everybody's got to read the tea leaves. So superimposed on that, we have VIX expiration tomorrow, and we're going to look at VIX again in a little while. We looked at VIX yesterday. We have VIX expiration tomorrow. Let me do this so it's a little less noisy. We have VIX expiration tomorrow, but the last trading day for VIX is today, and so expect craziness in the VIX space, technical term. Key number is 20, and we'll look at it. I put in my note that overnight VIX surged. I use these action words. VIX surged 7.4% to 20.5. Now the 0.5 matters over the 20 inflection point level. We'll look about that. So broadly, VIX over 20. Let's just say the bears are definitely going to be in control, and market makers are going to be hedging, buying VX futures-ish, and it's going to be hard to get moving. VIX under 20, things could clear out under 19, and we'll look at the numbers a little more exactly a little later on, but just kind of giving the broad roadmap now. So if that's not enough, Wednesday, tomorrow, we have the FOMC. They started meeting today in secret conclave behind closed doors. Stay tuned for leaks. Just kidding. That's a conspiracy theory thing. Just kidding. No leaks. We have the FOMC, the actual VIX settlement at the open price, so there'll be jiggles with that. We have the large quarterly SPX AM option expiration, which has got over 1 million contracts or whatever it is. We'll look at that. Now, most of those don't matter. You'll see hyperbolic tweets like, whatever it is, X trillion dollars, worth of options expiring. Well, yeah, but some of those are so far out of the money or in the money that they don't matter. What matters is what's expiring within 10 delta of us, up or down, and there's a lot of crosswinds. So it's really not that much, but it matters. And so Wednesday is the last trading day because of Juneteenth. Markets close Thursday. Normally, the last trading day is Thursday. The settlement price is Friday open. So there's this extra day of rolling, of possible decay, of uncertain movement with the with the Mideast tensions flaring, adding shit to the game, technical term, for Wednesday. which could certainly blow back to today. That said, today should be an easy day. Oh, by the way, please, if you have questions or comments on X or on YouTube, put them in the comment section and I can address them about levels, about what you see, what you think is going to happen. We'll go for predictions. Later on, we'll try to pick the pin and maybe the intraday range, and that's what we're going to do. Okay, so let's just look at some key numbers, right? You know, we're all traders here. We like numbers. So like I said, 50.63 was the low on Friday. The close on Friday was 75. So those are two numbers that we want to remember. So Friday close, we got it right here. Oh, look at that. I have it on my trading view screen. See that? So all the numbers that matter to me, I have on this string, which is simply everything that's in my narrative written out. I asked ChatGPT to make it into a string that I shove into TradingView. It's not numerically quantied. It's just my verbiage made into a string. So here we have Friday's close. So these levels matter. So as a credit spread trader, I'm going to look below this no matter what. Here we got the IC whale right down here. And so let's talk about the chop zone. And for that, we're going to switch to my go-to for SPX. For other stuff, I use Mentor Q. For other stuff, I use Gamma Edge. I use a lot of people. I don't crunch the data. I let other people crunch the data. I pick the data that I like and interpret it the way I do. You know. Okay, so that said, usually I don't show customer position like this, but the IC whale, and we'll get to what I typically do, but the IC whale is so dramatic here today that I wanted you folks to see this. More than 10,000 contracts. Thank you. I appreciate that. Well, hopefully you might subscribe to my Substack, but if you don't, I'm going to still be doing this anyway, because I've been doing this free for a number of years before I started the Substack. There's also a free version of the Substack, and I'll get all my links in there. I suck at the marketing, putting my links in there and all that, but I'll get better. Really, I've had lots of great mentors along the way, and if I can mentor some folks and share my experience, strength, and hope with you people, it's a win. Anyway, and hopefully you make some money on the side. So here's the IC whale. Here's the calls, 60, 60, 65. And here's the puts. So that becomes the dominant feature of the day. And so we'll look at the heat maps, and I'll get in a little more granular in a second. So let me just tighten this up, since we're probably not going up to 6,200 or down to 5,700. Let's tighten this up to a wide but somewhat usable range. Okay, and that kind of pulls this up too. And here's customers. I'm going to switch this to market makers. 0 DTE. And I guess I want to see net. Why do I want to see net? Where's the thing for net? Maybe I got it right. Okay, here we go. Doesn't really matter to me if it doesn't matter, because it doesn't matter to the market maker. It really doesn't matter to me. It doesn't matter to the market maker if they're long puts, long calls, short this, whatever it is. It's math. The numbers get crunched. then if they're long gamma or long delta, which they balance with gamma, or it's calculated the hedging adjustment with gamma, whether they're long gamma or short gamma, at what level, at what strike, at what delta, that's what matters. So this is position size, and as you can see, and just as a quick review, market makers are long gamma. If they're approaching it from below, it's supportive. They have to buy the hedge, and the whole mechanics of that was a topic for another day. So they start buying as we approach, and as we move away, they start selling, trying to keep these deltas neutral. If we have long gamma above us, as we approach it, they start selling. But then as we recede, they start buying to keep the deltas neutral, to keep their exposure neutral. So yes, you can think of it as support resistance, but it doesn't act the way, let's just say, resistance normally acts. When you think of a resistance normally, you don't think of, as we approach resistance and we pull away from it, we get pulled back to it or toward it. That's not the way we typically think of it, coming from a price action TA perspective, right? So you have to kind of adjust the way you look at the lines. You don't have to do anything. You might want to adjust the way you look at the lines. So I got people on X. I'd like to see some X comments. And then in a minute, I'm going to put in all my links after I do this, and then we'll kind of schmooze a little and figure out what to do from there. Okay, so 60-20, and my boy Ivy Trader, who's now on TWI Trade with Insight, pointed this out. We were chatting last night. He had 60-20 as a bull bear inflection point. And at that time, we were right around there. This was last night. And thinking about it, that makes a lot of sense. And so I kind of have that as the top of my chop zone and kind of where we inflect. And why is that? Let's talk about why that is. We have market maker long gamma here. So just think of that as a support resistance and kind of drift up to and drift away from. Now, these are significantly bigger. But once we've moved away from here and we've gotten to some kind of equilibrium here, this becomes what a friend of mine calls the biggest scratch on the table, and that's a conversation for another day. I like to tell stories. I'm not telling that story now. So this becomes kind of what we have to get over, and then how these are hedged out, what's going on in the rest of the space, what's going on with IV locally, what's going on, all that big stuff is going to kind of determine where this middle set point is. And I'm sure people, Alan or whoever, can calculate to 16 decimal points where that is and give you a moving target. I can't, and I don't try to. And so if we can get over this area, then we'll kind of get sucked into the influence of this. With as we head up, they start hedging down, and we get this zone. So broadly, we have these two zones with these little inflection points in between. Hopefully you can see my mouse. Looking at it at the heat map, there's a 60-20. So the math makes the 60-20 matter. You see it's dark blue. So the math tells us that it matters. Whether we think those little 1,000 contracts compared to 10,000 contracts matter or not, the math tells us that it matters. That's that quanti-intuitive crap I was talking about. Okay, so now if we break, obviously 6,000, if this should fail, in theory, dealers should be hedging, buying to support this. and should get a little battle in the 6,000 area where these, where there's nothing going on, free to move around the cabin. Should this break, it's down goes Fraser. There's really nothing below this. Let's go back to customer positions. So should this break, here's a customer long position right here. We got small volume of stacked puts down here. But I don't got to tell you, you guys are traders. What's going to happen if this starts breaking? The algos, the scalpers like you and me and everybody else are going to be jumping in, buying the 60-75 puts or the 60-50 cheapies. And then we get sucked into that negative gamma reflexive selling, and magic lines on ES traders charts get broken and they start shorting, and the high frequency boys have a party, and pretty soon we're down here scratching our heads. I'm not saying that's going to happen, just kind of being a little bit hyperbolic. And of course, as we're down here scratching our heads, the news channels are saying that, oh, it's the Mideast, or oh, it's the FOMC, or oh, it's the retail sales numbers, or whatever it is, which may be contributing, but from my point of view, it's the reflexive hedging and all that's going on in the noisy zero DTE space. Okay, so that's that. So now I'm going to halt for a second. I'm going to put in some links and do some shameless plugs, and we're going to go on to the next thing. And I invited some of my trader buddies to come on and speak. Somehow I can't seem to coordinate that. After the fact, they say, oh, why didn't you send me the link? Well, I sent you and I tagged you, but whatever. I have to do a better job of communicating. At the end of the day, it's always all up to me. The only place to look is inside myself. And whether that's interpersonal relationships or the market. Oh no, the market makers, it's a sabotage. They moved it here to make it us lose money. No, it's the algos. No, it's them. No, it's always me. It's always me. It's how I respond to the world, not what the world presents me. But anyway, enough McGraw psychologist. And we'll get back to McGraw trader. And for that, here's a discount link for options depth, which is what I was using. I'm going to put in a discount link for Mentor Q, who I also have an association with. And they have futures, and they have a lot of stuff. They have some new scanner that scans for levels, whatever. So they got some cool stuff. I don't really use it that much because that's not my game, but it's good stuff if you do. I just like their charts. Their gamma charts are easy, auto-populate, auto-update. And I can see where the lines are, and then using the rest of the analysis, I know what reaction to expect at the lines. I get lots of different services. They all have different nuances that I like, and so this is my integration of everything, basically, that you get to see here. Okay, so there's my Substack. Let's see what else I could throw on there. And oh yeah, like, retweet, restack, YouTube, whatever. And in case you're on YouTube and don't have my X link, in case you are living in the jungle somewhere, there's my X link. All right, Khan, there's my dog. He's not happy. Yes, it is. I appreciate that. Substack is the best way to support my work. And yes, there's a group chat on Substack. And I'm trying to find another way to also be able to communicate better with the community. And yeah, I'll be doing these live stream shares intraday on Substack, actually through YouTube on an unlisted channel that Substack users will have. And there'll be a lot more of this talking conversational stuff during the day. I'm still getting it out. Like I said, I'm 72-year-old. Not a techie. So I'm a one-man show. I actually have a few people that help me out and greatly appreciate it. Trying to get this organized. Oh, your weekend chat. So yeah, here's a subscriber. He knows me from a few different servers. I appreciate you following me. Yeah, weekend chats, and it gets informal and it gets interesting ideas. Because what I'll do, I don't know if we want to call this a shameless plug or not, as I'm over the weekend looking at charts, or maybe 9:30 at night on a Tuesday night, I might look at a chart, or I might see something, and I'll just throw my observation into the chat there. 3 hours later, the situation may change. So, and there's running commentary, so everybody kind of stays up to speed with all that. Anyway, yes, that's on my Substack. Okay, back away from that part of it. I appreciate the question, and back to making money. All right, and so you see, we're flirting with 6,000. What the initial reaction is going to be, it's hard to say. We got this MIDI stuff. We have all kinds of stuff. We have, like I said, VIX. So, going to wait to see what the initial. I appreciate that. Yes, you'll hear back from me. You'll hear back from me for sure. Yeah, and I'm very accessible, quote unquote. DM me on X, DM me on Substack, wherever. A lot of you know me from Discord. DM me somewhere. I'm happy to chat with people. People took the time to chat with me. So anyway, so here we are. Now let's go back to. Let's take our crystal ball out and look at the pin. And few quick comments about this chart. Yellow is suppressive charm. Decay pushes dealers away from the strike. Blue is supportive. The reason it gets darker over time is charm is mostly time dependent. Options decay. We all trade options here, I assume, or most of us. And so as options decay, and yes, it's theta, but it's more than theta. It's also vega, standard deviation of the expected move over time. What goes into delta? How much the option is going to move. That's vega, that's volatility. There's the quantity part of the approach. And so as the time lessens, the standard deviation of the expected move lessens. In 2 minutes, we expect it to move less than we do in 2 years, broadly stated. And so that's the time component. Options that goes into the delta calculation, along with other things. Deltas are going to decay. And so here we are. And so that's a nice long-winded way to show off, and let's see where we pin. So even though it's crazy and we're not going to go to 6,100, let's just get most of the numbers that we all have come to know and love. So one zone, 6020 to 6,000 chop zone pin. Maybe right around here, 6010, 6005, looks like a nice place. Should there be some news, whatever, maybe if VIX-Paris goes well, kind of where we closed. In here. Should the whale get skewered and we close below the IC whale short strike? So here's the IC whale, the short long. Now, this gets tricky because while it's big, it's not a lot of deltas. It's 5-point difference. So short this many deltas here, long this many deltas here. The absolute value of deltas is not quite as great as if those were just short contracts with nothing below them. So it's different. It's different. What often happens is we'll undercut or overcut the IC whales long strike, deal a short chase line, overcut it, and then retrace to it like we did yesterday. And then it may work, it may not work. Yesterday it didn't work. We retraced to it, looked like the whale might get away without being harpooned, and then he got skewered, which I'm glad, not because I wish him ill. He makes a lot of money. I know people that are associated with him somewhat. They make money. I just like having the features here to trade off of, self-serving. And so, but you know, we have this little area and we have the 5950. So pin, you know, 6,000 has been awfully sticky, but we're news driven. So I don't know. I'm going to say that this is more unlikely, that here is decent chance and here is a decent chance if we break. I don't know if we break or not. Some people think depends on vol. So while we're here, anyone want to hazard a pin prediction? We'll call it our PP section, pin prediction. Ready? Who's got a pin prediction? Broad level, broad area. Give me a zone. What butterfly would you like to put on right now? Whoa, we got us a bull in the house, ladies and gentlemen. We got 160.50. Well, maybe if news comes out of the Middle East, then we end up there. We got 2 votes for 6,000, which is sort of probably the most likely. Now, why is that the most likely? Well, actually, 6,000. We don't pin on one of these strikes, so I'm going to give the latitude and say over 6,000 somewhere in here. Now that's a nice trade. That's a nice trade. I might move it 5 points one way or another, maybe 15 wide, maybe break the wings a little bit, but that makes a lot of sense. 60-10, another good fly, something like that in there. And if we had the time to play, rather than a butterfly, I would show you a condor structure, not an iron condor, a condor which, instead of the 2 short strikes being the same, like on a fly, you just stagger them up. And it's a pre-built on your think or swim. So it would be, let's just say hypothetically, 6,000 long, 60-10 short times 1, 60-15 short times 1, and then 60-20 long times the other one. And you can spread them out and make them however you want. So it gives you a wider tent. It gives you a wider tent. There's pluses and minuses to it, so just kind of throw that in. Oh, the question, Selena, if I'm pronouncing the name right, was where do we think it's going to pin today? And so, if you're on Twitter, tweet out what you think your pins are. Come on, let's get on record, folks. Yeah, I'm going to go on record with the majority right in here, and then when I play around, then I typically put trades in, and you'll see in a second. Not investment advice. Don't sue me. I typically put trades in while I'm doing this, and I'll leave them just to one lot just to see what's going to happen. Usually they're what I call my wish trades. If we can get there, I'll take the trade. And so I'm going to switch to that in 1 second. I'm long-winded in case you folks haven't noticed, so it's not a tight presentation. So right now I'm going to Gamma Edge. I'm not going to evaluate the Gamma Edge profile, product right now. They have a lot of features I like. I was a beta with them. I'm friends with the founder. I consider Paul Duncan the main quant and founder and guiding light there to be a mentor and a personal friend. So yeah, there's a lot to be said for his platform. But okay, so I'm looking at VIX. Here's the 618, and he'll be on doing. He's agreed to come on and talk to you folks. We just have to schedule it. Assuming on, let me see. Assuming Omega News Catalyst, market. I kind of agree. I kind of see it pretty similar. I see it similar. Okay, so this is what they call their transition zone, whatever. And I'll go with that. Below 60-20, below 20, some of the pressure comes off of the VIX. I'm not going to explain all that metrics to you. They can explain it when they come on. Below 1950, VIX translates into more bearish, which for us is good, kind of level. So that's where my 1950 comes from. If I didn't put it on the thing, I forgot. There's a lot of numbers to get out into that note, and I spend more time fighting with ChatGPT because I type it up. I don't ask it to do the analysis. I type it up with 47 typos and with a random stream of thought, and I tell it to organize it and put stuff in the wrong way. It gets dates wrong. It gets numbers wrong. And I say, WTF, pay attention, literally, to ChatGPT, and we end up coming out with a note at the end. And it does the fancy emojis and shit. Okay, so that's basically what's going on. If VIX, we went to 20.5, no coincidence. Dealers are going to have to hedge that VIX exposure in the pre-market when liquidity is a little light. So I noticed that you might get a bit of a VIX overshoot at certain times, especially in the pre-market. Those of you that remember August, the big August JPY meltdown and all that, when VIX spiked to 60 in the pre-market, but then we opened at only 40 or 30 or wherever it was, because they had to chase the liquidity and they had to buy those, the VX futures just in case in the pre-market. So that might be what's going on here. That might be why, just by magic coincidence, we kind of stopped at 16 at 2.5. Quantitative. Okay, so that's what I see going on in the VIX space. All right, I'm not gonna. And once I get this a little more organized, I'll be doing more live stream during the day for subscribers, I guess, on YouTube, unlisted or somewhere, or just on Substack or somewhere. And we'll be doing this kind of thing, and people are free to speak. The upside 60-40. This is your range for the day. You're thinking 60-40 and 59-70, kind of where we're selling iron condors, where we're selling premium. Let's take a look. Let's take a look for fun. Okay, switching gears. My favorite part of the show, making trades. Okay, so what you see here, I have a fly I bought a while ago for the end of the month, something at 5,900 JPM just for fun. And I did variations of the whale trade here yesterday. Here you see the whale trade. Here you see the puts, it's down a little bit. Here you see the calls. Obviously, they're up. These are pennies. Now, the whale just leaves it. When I do a whale trade or a variation, I buy back each side separately because we're going to get bounces up and forth. I'm not looking to get, if I can make 50%, I'm happy. I'm a 50% to 70% premium guy. So, now your quick observation about the whales trade. See, I went further away on the call side than he did. Interesting. I've been tracking this guy. He normally sells 20 delta put and call ish, give or take $1, roughly equal premium on each side. Today or yesterday, he went with the 60-60, which gave him about $1.30 in premium. And with the puts, it gave him about 80 cents premium. He got about $2.10-ish, $2. And so he skewed it to the downside. So just for fun, let's see if he wanted to see, I have it marked here. If he wanted to close, he sold it for 2 and change, whatever it was. Let's just call it 2 for government work. He could buy it back at the open, which he won't, for 160 times 10,000, call it a 40 cents, $40 profit times 10,000, and call it a day. But he won't. When I copy his trades or do them, like when I see them, like on my other platform on Thinkorswim, I did them with a few different variations. But anyway, that's that. So that's where the whale trade is right now. If he closed it right now, it's profitable. If he closed it at the open, it'd probably be profitable. Okay, so now I'm gonna look at I'm a theta junkie. I've been 45 cents, 50 cents. No questions asked, I'll take it. And I also put on a few tighter ones for people who, clearly this is no longer a trade. On top, see, like some people say 60-50, whatever, 60-40 pin. I don't want to sit through the fake pain if we bounce. But I'll go with his strikes. I'm going to go with his strikes. That's not bad, 40 cents up there. I'm going to put it in at 45 cents. See if I get filled on a pop. Do another one at 50 cents. See if I get filled on a pop. And now we'll do something. See, right now, I don't see anything. At some point, I might look for something like this. 50, then during the intraday, I'll see how we are according to the chop zone. And if all hell breaks loose and I can get something down here for, I don't know, let's just call it 50 cents, I'll take it. If I'm nervous about this, I want to turn it into some kind of broken wing fly, I could do something like, I did one of these the other day for fun. I want to turn it into something like, sell 2 of these and buy 1 of these. Like that, I might do something like that. Not enough juice for that. If I wanted to play that game, I would play that game something like, if we break here, I'm thinking 75, we can get kind of sucked down to this area. So playing that game, I would do something like this. this, this, and maybe that for 270 credit. I like that. I might do, no, I need another one. Whoops. Okay, long three, short three, 85. I like that. I'm putting that in. And then what I did this the other day on Friday, very similar, I think same levels even. If this is profitable, I'm selling this and rolling it down here and buying this for the same 420 I'm paying for it. If I have to, I'll monetize it as a debit spread and reposition there. I'm putting that in. See if I can squeeze a couple of extra cents out of them. And let's look at the last. And I'm going to jump. I'm going to go to Valsigs. Most of you guys, if you're here, you know who he is. If not, I'm going to have him on as well for the for his morning meeting. Where's the thing here? I got to start these things earlier because I like to talk. Let's look at the pins. So we kind of want, let me just play a little bit here. A 10 wide with the center at 05, looking to close somewhere in here. Remember, if we close at 6,000, this is worth $5. 95 to 6 is $5. And if we go up to 605, you get even better. And then if we go up here, obviously you start losing your money. That looks decent. Now you could kind of play it like this a little bit. I actually like this one better. I think I'm going to put that one in. Now, I think for swim, I'd be doing them bigger. I'd be doing them different. These are one lots, a couple $100. They're easy to manage. So I'm not really thinking about, worried about these. Let's just talk about that condor structure for a second, because it's something that I like and people don't use often. Instead of selling the 605, right, times 2, sell that times 1, and by that time, sell that times 1, sell that times 1, give yourself a little room, buy that times 2, $1.85 gives you a real wide tent. Let's say you say, we ain't going to 25, we want to go a little wider for 40 cents. Maybe you want to kind of open it up, so you don't want to open it up too much, then it becomes expensive. So you want to kind of leave a little room here. So you can play around with this, or you can make the condor structure more like just kind of more standard skip strike, like that for 50 cents, or skip strike like that for 240. I'm a cheapie, so I would probably want to do something. I don't know. I'm not putting one in right now. I don't have a little time to think it over. But that's what we got going on. Okay, let's do a last look at the charts, and then I'm going to go see what Vol6 has to say. All right. They're fighting at the 6,000. So obviously we want to see the reaction. Let me bring up mental acute stuff. I like the way that chart visualizes. Update the script. And I just have my stuff superimposed on their stuff. I like that they have this auto update thing. And so here it's kind of gives us the idea of where the levels are with my stuff. I then know what I expect at those levels. And so here's my bull reclaim, whatever. Also, the expected move as of last night, I have that in my notes somewhere. It's on Twitter. I'm not going to pull it up. I think 90-ish was the bottom of the expected move, and 60-ish, 70, 65 was the top. Let's look at the expected move now. See, look at that. 6,000. A TA person would like to see an undercut, reclaim, maybe, like we're retesting the overnight low, and form something here and head up, grab a quick 10-point scalp would probably be relatively easy, whether with E-mini or with options or however you want to do it, or with SPY or SPXL, Elemental P, whatever you, XSP, which is the 1/10 the size of the SPX. Sometimes I use those to play with. Half the time just to learn, to try a thesis out. I don't want to throw out $300 if I have an idea, but if it's $30, and I might scale it up to SPX if it looks like it's working good. So as a pivot, are we talking like a price action TA pivot, a gamma pivot, the pivot based on what discipline, what way of looking at things? I'm not disputing, or I'm just kind of wondering, because we all come from different ways of analyzing charts or of looking at levels. Well, let's just look at the 630. I mean, 630 clearly, put it this way, 630 is a sea change. If we get over that 60-20, 60-25, that's a bull. That changes it to bull. So I can certainly, if you want to really see it clear, to say, okay, the bulls are in control, I can see that. I see the main pivot more like the 20-25 area, 15 stalls, see what happens. That's kind of what I'm thinking. But, okay, so we have the 60-10-20. Another vote for 60-10. A 60-20. So we have most people in the 60-10, we have a few down 6,000, which is also a very reasonable level. Pin it to sticky round number, why not? We got a bull because Trump makes a deal or something up at 50, and we get sucked up there. We have another 60-40. Which, if we get caught between those two big gamma strikes, that's a very clean place for us to stall out. And that's what we see. Okay, at noon, my brother Binkus may or may not be on. He will be on Substack for the paid service. He has a paid service. We kind of mush them together. It'll eventually be Options Gelt. We're figuring that out. Where he does kind of the exact opposite. Well, not the exact. He does intraday scalping. So he'll buy basically a 60 delta put or call and hold it for 30 seconds. 3 minutes is long. A 5 minute is like a long-term retirement trade. He's not in them very long. He uses convex value. He uses delta flow. He uses IV changes. And he uses his own secret sauce based on volatility band, a book by Kurt Northington, where the author wrote an indicator for him based on the volatility movement within like a 1 minute time frame is what he uses. And so he may or may not be on, we did a few live YouTubes. If you look at the YouTube channel, there might be some of his scalping methods on there. And so that's something that's coming up, that will be coming up. So yeah, there's that. Okay. 60-30. All right, so I don't see any 59.75s, 59.50s. Where's my bears? Is there a bear in the house? Is there a bear in the house? Anybody think the IC whale gets skewered? If I could, I'd launch a poll. I'm going to launch a poll on Twitter. Does the IC whale get skewered today? Does he get harpooned? Sounds better. Anyone saying the IC whale gets skewered on his put side or his call side? We'll give it 1 minute, then I'm going to go. Does IC whale get harpooned? I say no. He's at risk, but I say no. The only, I would say with more confidence, if it wasn't Vixpiration. If it wasn't Vixpiration, I would say it, like with a higher degree of certainty. Hard to be a bear. Feels like you're right. As long as you're riding with the fish, not swimming with the fishes like Luca Brasi, you're okay. Anyone know who Luca Brasi is? What movie reference is that? I'll give you a hint. I'm ready for the hint. It's not personal, it's business. Keep your friends close and your enemies closer. That's from The Godfather. Luca Brasi is swimming with the fishes. Okay, there we go. OG over here. And Luca Brasi was the paid assassin who, we don't have to worry, we got Luca Brasi. And then Luca Brasi was swimming with the fishes. They got him in the bar and they carried it up. It was a good scene. Okay, now I'm really going. Goodbye. Too young for that, right? It's a classic. You kids today, I'm just teasing. Rewatch the Godfather movies. I think they play well even half a century later. Show you how old I am. I read the book before it was a movie. So there's that. Okay, guys, take care.